Good afternoon, good afternoon, good afternoon. Y'all know what time it is. It's my Live at 5 session. Today is July 27, 2021. Man, I tell you, man, we have a few more months left and we're going to be right in the middle of beginning of 2022. So, good afternoon, everybody. I'm excited to see you on the line this afternoon. And I have some information I'm going to share. I think it's going to be life-threatening. I think it's going to really open up some eyes to some folks who just don't know. Our job is to educate. But anyway, it's been a very good day here at the National Training Center. Man, we had a phenomenal training last night with entrepreneur Darnell Self. He really dropped some nuggets on us last night that I think is going to be life-changing to our members of our team. I mean, it was phenomenal. Just really talking about business. You know what I mean? We get so hung up in whatever product we're selling that day or that week. But when you get into financial services, yes, you got to have good products. I get that. But it's really about running a business. You know what I mean? You're more than just someone selling something. You're running a business. You're protecting families. You're getting people out of debt. You're creating legacies. So he dropped some jewels on us last night, and I've been looking at him and studying him and say, you know, what do I need to do to get better at my craft in 2021 so I can have a bigger 2022. So y'all know I always start off with a few announcements. Tonight at 7 o'clock, you know, that's always my first announcement. We have an opportunity session presented by 3 dynamic individuals. We have Kevin Edmondson. He's the host. Kevin is a retired firefighter having much success in this industry. I say all that to say it could be someone watching this today that has a background. You're a police officer, you're a firefighter, you're a teacher, you're a preacher, whatever it is. You might think, you know, can I do this business? So Kevin is a major contributor to our organization. He's a retired firefighter. His manager, Debbie Short, a high-level federal government executive, is also going to be presenting tonight, has been with us for over 15, 16 years. And then Barbara Bolkavich, hierarchy leader, who I've known since 1994, has doing a phenomenal job. So them 3 are going to be presenting the American Classic Agency opportunity tonight at 7 o'clock. As I say every Tuesday, this is the best 45 minutes that could change your life forever. So that's what's going on. For those y'all that's looking at this, you're already agents. You know I'm doing a special training tomorrow morning at 9:30 for our new agents. I want to get our new people up and going so they can get off to a better start. But tonight, the topic for today is this, and I've heard this for a number of years. Anthony, my granddaughter is 2 years old, and I'm going to go down and I'm going to open up a savings account for her. Should I do that? Or I have $100 a month to set aside for my granddaughter or grandson or whatever that's 2 years old, 5 years old, 6 years old. It doesn't really matter how old they are. Should I open up a savings account, or should I just buy some CDs? I mean, just what should I do? They're not even thinking about what they really should be doing. And that's where we come in. You know what I mean? That's where we come in. What should they do? I mean, first of all, it's a blessing for a parent or grandparent to want to do something for their child or grandchild. Let's just start there, because everybody doesn't want to do that. The second thing is, what should I do? I have $100 a month or $150 a month to work with. What should I do for my child? They're only 2 years old, Anthony, or they're only 30 days old. They were just born in May, whatever the case is. I mean, what should I do? And I say, you know what? Let's take a look. What are your choices, right? What are your choices? Well, you can invest the money, stock market, mutual funds, whatever. There are no guarantees. You know what I mean? We know that. Or you went to the local bank and someone comes from behind, they open up a savings account. Well, We know what the savings accounts are paying. 1%, less than 1%, 0.5%, 0.65%. We know what they're paying. But let's just say I'm giving you 1%. Based on the rule of 72, if that 1%, it would take 72 years for my money to double, right? So that's not going to happen. That's probably not the best thing. Here's the other thing. When I put my money in a savings account or CD or money market or whatever the case is, it does one thing. That's it. In other words, I didn't maximize that money. It did one thing. It saved, right? And at an interest rate that's not even keeping up with the rate of inflation. That's all it did, right? That's all it did. That $100 a month that I'm putting in, that's all it did. It saved somewhere. That's it. If I do that for 3 years, okay, I pretty much got whatever I put in, because we're not really gaining much interest at all. You know that. In other words, we're going broke slowly because we're losing the purchasing power of that money because it's not even keeping up with the rate of inflation, right? So that's what it does. All right, that's fine. That's all it does. So those are my options. Do I put it in a savings account, money market, CDs, whatever the case is? It just did one thing. It's liquid. I have access to it. And that's the problem with most people, why we can't save money, keep it saved. We always want to have access to it, all right? And that's fine. You know, having access to it, liquidity is fine. So that's what that does. But if you ask me, say, Anthony, what should I do? I have a 2-year-old, I have an 18-month-old, or whatever the case is. I have $100 a month that I'm working with. What should I do? I have about 20 more years for my son or granddaughter, grandchild, whatever, to go to college. What should I do? And some people look at me like I got 3 eyes in my head when I say, you know what? You should purchase a permanent, you should invest in a permanent life insurance policy. Life insurance? My son or granddaughter or grandchild is only a year old or 6 months old. Why should I buy life insurance for them? I said, well, a couple things. Number one, you said you want cash to build up that you can have access to. You still want liquidity, right? Yes. Well, you can do that with life insurance. You really can. That money can be used to fund a college education. It can be used to buy books. It can be used to pay tuition. You still have access to it, right? But more importantly, and let me talk about this first, and then I'm going to move on, because I don't want to spend a lot of time on this little piece right here. None of us know that our children are going to grow up healthy all our life. We don't know that. We all know what's going on. Just turn on the TV. Every time you turn around, there's a mass shooting. There's always something going on. I don't like to talk that kind of stuff, but stuff happens, y'all. And we need to be prepared. Stuff happens. No, we don't want to think like we're profiting on a child or grandchild, but stuff happens. So we need to be prepared. I know if it were me, if something happened to my children or grandchildren, I ain't going to be no good for a minute. I'm going to have to go to counseling. I'm going to have to sit on someone's sofa. And they're not going to let me sit on there without charging me. So I'm going to need to pay for that. But more importantly, we want to guarantee their insurability. In other words, when they do get of age and get married, have a child, buy a home, we don't want we don't know if their health is going to be good forever. So we want to guarantee their insurability. We have programs available that if you put a program on a child that's 1 year old, now they're 25, they got married, had a child, and let's just say their health has changed for the worse, they can be guaranteed to get coverage up to $400,000, y'all, without ever answering another medical question again. That's called a guaranteed insurability rider. Not all companies have that. We do have that here. So when I think about what should I do with the $100? Should I put it in a bank account? Should I buy get a savings account, or should I buy life insurance? You need to buy the life insurance, because that $100 does multiple things with life insurance. It guarantees their insurability. You can have tax favored income, right? It's liquidity. The return is better than the rate of inflation. You can do it with terminal illness coverage. It can have chronic illness coverage. It can have critical illness coverage. It can have critical injury coverage. That $100 a month can do all of those things. You could design an income stream that they can never outlive. I can't do that with a savings account. So the answer is, if I'm going to pay $100 a month for my child or my grandchild, I want a program that takes care more of what ifs. And I would suspect you do too. But you got to know what the plans are. And that's where we come in. So we're offering free consultations. We're on a mission. We don't want no child to go back to school this fall without being insured. And we're thinking about $250,000. I know some people say, oh, $250, that's a lot. Well, not really. When you really sit back and think about it, not really. We're putting it in position where instead of them having $24,000 at age in 20 years, they could have close to 30 with the same $100. So everybody, every child should have some kind of permanent life insurance. Or if you can't afford permanent, get term, get something. Stuff is happening all around us, y'all, and we don't want to be caught off guard. That's better than putting that money in a savings account that's pretty much collecting dust. So give us a call at 301-794-4290. Inbox me. Let's get our children covered before they go back to school, right? I mean, we all know what's going on around us. I don't have to repeat it. We all know COVID-19 is real. You know, we all know people are doing some crazy stuff out here, and we don't want to be caught off guard. So every child needs coverage. Every parent needs coverage. Every grandchild needs coverage. Every cousin, nieces, nephew, aunt, uncle, lottie-dottie, and everybody needs coverage. I am sick and tired of looking at GoFundMe. We are better than that. We don't have to do that. We just have to sit down and plan. You know, that's all we got to do. And studies still show today that most people spend more time planning a vacation than they do financial planning. We got to stop that as it relates to our community. So the question is, should I insure my child or grandchild, or should I put that money in a bank account or buy a CD or whatever it is? You should get them life insurance first and foremost, before you do anything else, because you're guaranteeing the insurability. You're still building up tax-favored income. You can still access it for any reason. You don't have to explain the reasons why. It's creditor protected in most states. The growth is tax deferred. You can access it on a tax-free basis if you do it correctly. It has terminal illness coverage, chronic illness coverage, critical illness coverage, and critical injury coverage. All of that is automatically included at no additional cost. You're getting more bang for your buck. So again, in closing, if you want to have a one-on-one consultation, give me a call at 301-794-4290. We don't want to send any child back to school this fall uncovered. And it takes more than $10,000, y'all. Right? So let's do it. We're here to help you. Thank you for your time. Thank you for joining me today. And then we'll talk again next Tuesday. I'm not sure what the topic is going to be yet, but we'll come up with something. Talk to you later. Bye-bye.